Hello and welcome. You're watching Markets Today on Business Today TV. I'm Sakshi Batra. Well, the markets have started this new week on a very somber note. A sharp negative is what we saw the benchmark indices really trading at the opening tick. In fact, just in about 2 or 3 hours in trade, we've also seen the Sensex slip over 1,000 points in trade. And not just that, the investors have lost just about 7 lakh rupees only in these last three and a half hours of trade. So what does the market outlook look like from here on? What is the strategy that you should adopt in the markets right here? The sectors and the stocks that you should focus on to protect the downside in your portfolio. All of that will be discussed with a very special guest joining right in. But first up, all the market check for you. Right now, we can actually see the Nifty really trading at 17,071, down by 1.5% or 255 points right now. In case it's just trading at the lowest point or near the lowest point of the trading session. It's an all across red that you can actually see. In fact, all the sectors of the Nifty, barring the IT index, actually are trading in the red. Sharp declines coming in for the metal counters. They are seeing some sheen being lift off from them. 3.5% downtick on the metal counters today. Over 3% cut on the PSU banks and the realty stocks. Sharp declines coming in even in the auto space. Over 3% cut right at the slowest lane is what you can see the auto space really moving in today's trading session. It's a sea of red. You can actually see the farmers down in trade, the FMCG counters down in trade as well. All across the board, you can actually see sharp losses, and this comes on the back of the global cues that we've been seeing. Sharp cuts in the US markets, which are now trading near the 52-week low levels. Also, the Asian markets are seeing sharp cuts in today's trading session, and that was very expected in today's trading session as well. Look at the India VIX. That's the index that you need to really monitor because that is showing sharp move on the upside. 7.5% uptick right now. Talk India VIX, which is now trading at 22.12, a concerning level, which indicates very high volatile movement in the markets right now. The broader markets, the mid and the small caps, also seeing some sharp cuts coming right here. The small cap index down by 3.2% in trade. The mid cap index also down by 2.7%. On the market breadth, if you talk about the Nifty 50 stocks, 40 stocks in the red, just 10 stocks in the green. Top of the charts, still holding up some of the stocks like Divi's Laboratories, Nestle, Infosys, Asian Paints and HCL Technologies up by 1.5% each. Talk about the losing sectors and the stocks right there. On the losing side, you have Power Grid as the top loser right now on the Nifty, down 7% in trade, followed by Tata Motors, Hindalco, Eicher Motors and Adani Ports, all down by upwards of 5%. And now get going with our expert to really understand, what to make of this kind of a market fall. Avinnash Gorakshakar joins in, Director Research at Profitmart Securities. Good morning, Mr. Gorakshakar, and thank you so much for taking the time out on this discussion. Well, first up, your thoughts on this very sharp decline that we've seen. It also all looks like, now we are actually falling in tandem with the global markets.
Good afternoon, Sakshi. I think you rightly pointed out that today's fall in the markets, the Indian markets, is largely because of global kind of headwinds. I think we saw the US markets falling very sharply, on Friday. Most importantly, I think now the news in the markets are that possibly interest rates in the US could touch even 5.5%. So there's a lot of headroom for interest rates to go up. And inflation seems to be a near-term concern. Most importantly, I think, almost all the asset classes are down, apart from equities. If you can look at the rupee, if you can look at the, commodities like oil or even gold prices. So all the fall is coming at the same time, and that is something which is creating panic across global markets and Indian markets. So I think it's a very important aspect that investors should be very cautious at this point of time. And I think, if 17,000 is broken, Sakshi, then I think we could be headed towards 16,800 or 16,700. At least the near-term scenario looks a little bit scary. But I think definitely, as long as global markets remain weak and the rupee continues to be weak, the markets are definitely going to find it, difficult to respond to bounce back pretty soon.
Absolutely. And it also punches holes into the theory that had been doing rounds, the decoupling theory of the Indian markets from the globe. Do you see now that getting reversed? Although we have not fallen to the extent that US markets have fallen, we're just about 7-8% down from the all-time high levels. How much more downside really can you expect from the markets from here on? Is it going to be a very, very sharp fall? Is it going to be like just catching the falling knife in this current market if investors would put their hands into this? What do you really expect?
Yeah, I think Sakshi, the most important aspect to monitor is the bond yields. Bond yields have touched record levels, and that clearly indicates that equity prices are going to find little difficult to go up in the near term. And I think decoupling theory definitely does not hold ground. I think to go back in history in 2008, also when the markets corrected here, obviously initially the markets were not decoupled, but then obviously they reflected the global pain.
Yeah.
So my sense is that if the global markets continue to underperform, then even Indian markets could obviously look at a lot of pain going forward. And I think the near-term support is 17,000, as I told you.
Yeah.
We could be looking at 16,500 or 16,800. Of course, the fall in the Indian markets would be comparatively less compared to global markets, but I think the near-term upside looks a little bit capped.
Right. But what is the place to hide right now in the markets, when you talk about the various sectors or the segments of the markets? Is it the broader markets? Is it the large caps? Is it some particular sectors or just select stocks that one should be really approaching right now?
So I think clearly it could be a mix of sectors and some select companies, and I have been quite positive, on sectors like automobiles, auto components, capital goods. For that reason, even housing finance. So these are select pockets where I think there are lots of opportunities available, and the markets had also risen quite disproportionately in a very short period of time. So I think this could be a good time for investors to actually build positions if they have a view of for the next, say, 6 to 12 months, because I think primarily India is one of those markets where fortunately the macros are very positive. Demand is now getting back to normal, and I think we have our fiscal numbers in place. So I think these kind of setbacks in the market would come and go. But I think if you want to build a portfolio, I think you can do an SIP in these kind of sectors, and possibly in these kind of companies where the price action could definitely come in, but obviously one has to exercise a little bit of patience and conviction here.
Right. But what are the factors or the triggers that the markets will be really watching out for to move in either direction from here on? We are looking at the RBI policy this week. Again, there is high expectation that again the RBI would move towards a rate hike. Your expectations from the RBI policy, upcoming policy, how much rate hike do you really anticipate? And in case it was for a steeper rate hike as we've been seeing across the globe, then what could be the repercussions for the markets?
I think the market is discounting a 50 basis hike in the RBI policy, which is expected on Friday. But I think, Sakshi, I don't think we could be looking at anything beyond 50 basis points hike, because I think overall inflation numbers seem to have been managed pretty well by the government. And I think despite the fact that, food inflation has not come down, I think if you look at all the commodity prices, if you look at all the other components of inflation, they have been coming down. So that's a good sign. In fact, crude has come down to almost $85 to $87 a barrel, which is a good sign. So these are positive signs for the inflationary number. So my sense is, I think I don't expect any negative surprise in the RBI market, RBI policy. But I think, yes, the commentary from the governor is going to be very important. What kind of aspects does he comment on? What kind of global headwinds does he see? I think these would be, key points to monitor, when the RBI policy is announced. So net, I think the markets would be little jittery ahead of the RBI policy. But once the RBI policy is out, I think the market should, definitely now take it from there on, and hopefully the market should stabilize.
Right. Hopefully the market should stabilize. That's the hope that all the investors really have. But Mr. Gorakshakar, if Navratri have started and so have the festive season, but I want to understand from you, if one were to really think of it as an investment opportunity, you just mentioned how all the sectors, all the asset classes, in fact, are actually down in trade, be it gold, be it crude, be it the currency or the equity right now. What would be the right approach that investors should really have to this festive season to create a basket of portfolio, and how should one really be approaching all these asset classes when all of them are down in trade?
See, I think my sense is investors make a lot of money only when the markets are volatile, and typically in bear markets they make a lot of money. So investors should not be worried about these kind of setbacks in the market. In fact, my sense is that this kind of market gives an excellent opportunity for investors who want to create a good long-term portfolio. I would like to reiterate that from the finance, stocks like SDFC, for smaller companies like Aptus Value, look very attractive. I think one can think of doing an SIP here and obviously build their positions here. From the capital goods space, something like a Larsen and Toubro or something like a Cummins India, also looks pretty attractive and pretty solid. And obviously, if one looks at the auto basket, then I think Mahindra and Mahindra, Ashok Leyland, these are companies which are going to do very well. And just to tell you, the festival season started on a very strong note. We have been hearing reports that, demand across textiles, garments, automobiles have reached record levels. So I think you're going to see a very strong quarterly number in terms of corporate performances, all these sectors. So my sense is, I think you need to, have a little bit of patience and conviction and stay, positive in this kind of difficult time. I think the markets would definitely bounce back, but I think it's a matter of time, maybe another couple of months, and I think things should humble.
Right, but give us a Navratri stock pick that you would want to give to all the viewers today.
I think from a Navratri pick, my position would be, on the cement sector. I think we are very positive on the cement sector. JK Lakshmi Cement is pick for Navratri for the next Navratri. I mean, for the next 12 months, I would believe that, this is a company which has got a presence in 11 states. It's got a capacity of 14 million tons per annum. Another 2.5 million tons is going to be added by subsidiary. So one could look at a price of around 680, 690 over the next 12 months. It's at around 570, 575. So clearly, I think positioning is good. And I think if you can have a time frame of 12 months, you can definitely make a decent risk reward.
Absolutely. But I also wanted to take a comment on the primary market space from you, Avinnash, and that's on Harsha Engineers' international debut that it has made in an otherwise very, very weak market, a very strong debut. All the credit to the company. We have seen it's the Ahmedabad-based manufacturer of precision bearing cages. You were talking about the auto and the auto ancillary related theme as well. So it called the market-wide sell-off today and made a stock debut at 444, a premium of 34.5%. We are right now seeing a 42% jump right there. It's trading at 470 rupees. Your thoughts on Harsha Engineering as a stock pick for all the investors who had the stock, got the allotment in the IPO, the strategy that you would advise for those who may be looking at from a long-time perspective on the debut day who may want to enter into it?
Yeah, I think, this company's IPO got a very strong response from investors. It was oversubscribed over 75 times. And my sense is that, the price which we are seeing today is a kind of a justification that auto component sector companies are going to do very well. They are large suppliers of auto bearing cages as well as they operate on the solar sector also. So I would believe that those who have should definitely hold on. An ideal entry price would be about 450 to 460. And I think the next 12 to 18 months, definitely outlook is positive.
Okay. Also, one comment on the Tata Group stocks as to what would be the approach for all the investors. I mean, of course, Tata Group has been a favorite of investors for a long time. Now we are hearing news of more consolidation coming in as far as we heard last week as well, 7 metal companies being merged into Tata Steel. Now, the reports that suggest that Tata Group would be now reducing the number of listed firms to half now, from about 30 to 15 now. What should be the approach that investors should have here? How will it really benefit the stocks and the shareholders?
See, I think this merger of 7 companies with Tata Steel, this amalgamation was in the pipeline for a very long time. And I think the biggest beneficiary is obviously going to be Tata Steel because, all these companies used to pay royalty separately for the raw materials they used to buy. I think now, once the merger takes place, the cost, I think efficiency is kick in. Plus, there are going to be a lot of duplication costs which are going to be avoided. So I think, the companies which are risen smartly could possibly see some sell-off, but Tata Steel as a consolidated entity would benefit, and this could come over the medium to long term. So I think Tata Steel would definitely qualify as a recent bet over the longer term. And I think most of the Tata companies, I think if you look at companies like Tata Consumer or Sakshi, I think they are very well positioned, and I think one should bet on the consumption theme. So this is one stock where any dip in it should be used as an opportunity to buy.
Okay, well, we'll wrap it up at that. Thank you so much, Avinnash, for being with us on this very special edition. And here's hoping that the markets look at some rebound. There's been coming off the lowest point of the day for sure, but very, very slightly. No signs of a sharp rebound right there, but there are hopes rising high that in the interim period, the markets will bounce back, like you pointed out, 17,000 as the crucial hurdle, and below that 16,100 where the supports could be found as far as the Nifty is concerned. Specific sectors and specific stocks is what Avinnash really expects all the investors to focus on right now to be able to manage better in this very, very volatile and sharp decline in the markets that we are seeing right now. When if you look at current market scenario, I'll just do a check for you right again. 17,047 as the current level for the Nifty right now, down by 1.6% or 280 points in trade right now. Well, all the sectors of the Nifty are still in the red, barring some gains that are coming into the green as far as the IT sector as well. Let's also talk about some of the top gainers and the losers right now as far as the markets are concerned. You are seeing a whole lot of churn in the markets as far as the markets are concerned. HCL Technologies, Nestle India as the top gainers right now for the markets that are up by 0.5% in trade. Let's also talk about the other gainers that are from the healthcare space. Divi's Laboratories, Cipla, Infosys also gain strength right at this moment. Talk about the losing side on the Nifty 50. You have some declines coming in on Power Grid. That's now seen a sharp decline of 14% in today's trading session. Hindalco, Tata Motors, the other declining factors, 7 to 9% fall in trade right now. And with that, we wrap up this edition. Do stay tuned onto Business Today TV for a whole lot more update on the stock markets and news from the world of business. Thanks a lot for tuning in for now.
If you like the video, do like, comment, share and subscribe.